Market falls today, but FMG, CG went up and small cap stayed strong and metal crash. If that sounds confusing, this 5-minute explanation will create you. Hi, this is Mahesh Kadran. I am a debt freedom coach, and every week on Friday, I decode professional market reporting into simple language so that you, like simple investors, can understand what's really happening in the market without fear, noise, or tips. And if you're a new subscriber, please like and click on the bell icon so that you will get all the results. So this week, US 50 down at around 20%. Walk where some people slowed down, some kept walking, and few quietly moving ahead. And this is why the index look weak, but the market underneath tell a mixed story. How many of you agree that this has actually happened today? Right? Now, why metals and IT pulled the market down? Let's understand this from perspective. Metal stocks fell sharply, more than 5% after rising for 3 straight years. Now, if you are anybody tracking the market, you can really understand what I'm talking about. But this wasn't a panic selling; it was more of a profit booking. See, whenever someone is cashing on winning after a good run, instead of pushing the luck further, that's called as cashing in. Right, it's more of profit booking. So at the same time, if you see IT stocks slipped around 1%. Now this happens because US tech markets fell overnight and the global tech stocks also moved together. And that's why it's like that you have a set of birds, changing direction when the wind shifts. And you might have seen the sky as well. This is what a metaphor I'm trying to say with that. Why the US tech market fell overnight and why the global techs are following together. Right? These two sectors have dragged the interest lower. Now, why FMGC and consumer stocks went up? Now, while metals and IT were falling, FMG and consumer durables actually gained. Now, what happens in uncertain markets? See, for example, always the Warren Buffett also said that whenever you buy any stocks or you buy any market, you see whatever you're using in everyday life. Say, for example, you're having a good toothpaste, you're having a tea. So this kind of things will always be there. So investors in such uncertain markets, majority of investors usually prefer the businesses that sell the everyday essentials. Okay, so similar to how the households prioritize the groceries over luxury spending when expenses fell uncertain, and this shift help balances the market and prevent a sharp fall. Now, a big disclaimer to this thing is because I am a debt freedom coach, but for this kind of videos is actually an education video. I'm trying to educate you what is happening in the market and how you can take the decision about it. So please concentrate or connect with your financial advisor for more advice, because in this volatile market and every financial market, any financial decision you take, always you have to have your professional financial advisor, because that's where the game changes, and that's where a lot of people have gone up into ladders of the things. Okay, now coming back to this thing, the mid cap, small cap, and market bread. Now, what I mean by that, mid cap stocks were slightly lower, but small cap managed to stay positive. Now, this tells us something that money wasn't exiting the market completely. See, remember always, it is not that all the money is going from the market, wiped out the market. No, it's not. It's like water is shifting from the container to container, not leaking out. So, for example, you have one container where there is a one hole. Now, there's another container which is downside. So, what is spilling into this container, then again this spilling into container, this container, which have we have always we have played in our childhood, if you remember, which is like this kind of things, right? So this is what this thing is all about. Now, global and commodity, when we talk about in the broader perspective, gold prices actually fell sharply because the speculations of the change in the US federal leadership. Now, some of might know or some of might know, you can always search in Google as well. The gold are not produced in India; it's actually being imported, and that's why government are saying that don't go for gold, right? The physical gold kind of thing. So what stands there is that US has a larger reserves of gold, and that's what is being talked in the news. But when this leadership changes of US federal, that's where the problem has happened. Now, Trump is looking for Powell's leadership. Yes, there might be changes will be there. So let's see what happens in the future. So when rules or leadership might change, people usually pause before making big decisions, and market behave the same way. So global cues remain mixed, adding to the caution role. Okay, now when we talk about the why investors should be cautious, see, with a union budget just a few days away, like 2 days, and or investors will be avoiding taking bigger position. Like it's same like that. See, if any say for example, if you're working professional, your appraisal is now in March, right? So before going for applying for another job, why you would wait for the appraisal, right? What I would get my bonus, what I am getting or not, then only will spill the beans that I'm going to shift my job. That's what happens, right? How many of you agree to that? I can think most of the people would agree with saying this live video. Yeah. So most people prefer waiting rather than guessing. That's what has happened with the investors as well. So they avoided taking the big positions, and that's exactly what as market did. Now, what this mean for investors like us? Okay, mutual fund investors or personal finance investors. This is not a panic market. Remember, and please note, it is a selective market. So where the money is actually going from a sector to sector instead of leaving the system. So like I said, that bucket of water which is leaking from one bucket to another, that's how what is happening. So money is shifting from one sector to another sector, and that's it. For long term mutual fund investors who are making investors in mutual fund, this phase is all about staying disciplined, be patient, continuing SIP, and avoid daily reactions. That's what my advice to you. But if you're investing to mutual funds and want the market explained calmly and what without any predictions or tips and everything, make sure you follow and subscribe to this channel. Every week I come on Friday and decode real market report and stay informed and constant investor. Now, ending line, I just wanted to say, market don't move in the straight line. They move in phases and phases. They come, the demand and supply will always be there, and when that is not matched, always these problems are there. So you understand the phase, which matters more than reaction. See, always we react first. Don't react to the market and whatever the conditions are there. Just first understand what is exactly going in the market. Is it important to you or not? See, major of the points what I am telling you, that most of the things might not be important to certain investors, right? So some of the investors might be interested in such kind of things. So it depends upon you what kind of investor you are and what kind of technologies you want to do and how you can do this. Okay, so if you're a new subscriber, please like it. And I am doing debt freedom counseling as well. You click on the description, there's a Google form, you can dive to it, and let's make it happen. Thank you so much. See you in the next slide.